The Liberalised Remittance Scheme, or LRS, of 2004 allows Indian citizens to remit up to $250,000 abroad annually without prior permission from the Reserve Bank of India. According to a May 16 notification of the government, international credit card transactions made abroad are now included in the annual limit of the LRS. However, the same is not applicable for shopping from foreign online platforms by residents while in India. That makes your international shopping expensive. But the tax collected at source, or TCS, is not a final tax. A TCS payee can claim a refund for the TCS as his tax payment against regular income and adjust it against the advanced tax payments. But RBI approval will be required for spending beyond this LRS cap.
It will definitely affect the cash flows of each and every individual who are looking to remit these money, or even if for people those who are going out for any sort of tour activities, that will be affected to everyone. But it's a cash flow issue and not a additional tax issue. However, for people those who are taxpayers and they have their tax liability, in fact they can take this as an opportunity to plan their advance taxes. Like if you are any which way is going to remit money outside India, so that there is going to be this 20% of TCS, then they may pay less amount of advance tax, or the self-assessment tax, which otherwise they were any which ways required to pay. So for people those who are liable to pay tax in India, they can they can adjust this money against their tax liability. So for them, again, it may not be a cash flow issue, but only for people who are not liable to pay tax and they are still suffering or they have to go through under the TCS, for them this will be a cash flow issue.
Remember, the card issuing bank may also charge additional forex markup (GST) on the card usage abroad. The new rule will not be applicable for the payment made out of the funds held in resident foreign currency. There are no changes in remittance for the purpose of education or medical treatments abroad. Thus, your foreign vacation is also going to be more expensive, as you have to shell out a higher tax collected at source from July 1st. The TCS on remittances for booking overseas travel packages will increase from the existing 5% to 20% if it exceeds 7 lakh rupees. The Finance Ministry has clarified that changes in the LRS norms do not cover overseas business trips of employees sponsored by their companies. The inclusion of international credit card expenses under the LRS is aimed at bringing parity with international debit card expenses, which are already under LRS. In 2021-22, $20 billion was sent abroad through LRS, with $6 billion sent between October and December alone. The Finance Ministry's notification also points at instances where LRS payments are disproportionately high compared to the disclosed income.
For all these liberalized remittance scheme, this is as per the government data, they figured out that, in spite of having earlier the maximum rate was 5%, they still found that there was a lot of taxpayers who just took it as an extra cost. Like, if you are going up overseas and you are making some payment for 10 lakhs or 15 lakh rupees, they just took it as an extra cost and they never bothered to file the corresponding Indian income tax returns. So in order to make it a little more onerous and cumbersome for the people at large, because 20% is obviously a larger sum, so this will incentivize people that that 20% is stuck now with the government. So it will make sure that they will go ahead, file their income tax return and disclose these travels and related expenses.
And that is not all. Higher TCS will increase the cost of sending money abroad for Indians, potentially leading to a decline in the amount of remittances sent. This could also discourage investments in foreign assets such as real estate, stocks, and bonds. As the fund stays locked in until the refund from ITR is received, the small and medium enterprises may also experience shortage of working capital. The introduction of 20% TCS on foreign remittances has invited a range of comments from industry players, most of whom expressed uncertainty regarding the whole situation. However, amid the concerns raised about the applicability of 20% TCS, on May 19, the Finance Ministry has excluded international debit and credit card transactions up to 7 lakh rupees from the LCR limit and will not be attracting any TCS. Experts believe 20% TCS is high, a sudden jump from the previous 5%. They also emphasize the impact of the move on SME cash flow, overseas travel, and foreign investments from India once the revised TCS is implemented.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.